Welcome back to the Restaurant Growth Show podcast. Today, we are thrilled to have a special guest with us, Vinny Puleio. Vinny is not just any expert in the hospitality space. He's a strategic powerhouse with a 20-year journey of success as a restaurateur, startup investor, and consultant. Vinny brings a unique 360-degree view of the industry, backed by an extensive network and a reputation as a trusted and humble leader. As an investing member and the head of due diligence for hospitality tech at Miami Angels, Florida's largest private angel investing group, Vinny knows what it takes to make a mark in this dynamic sector. Vinny, it's a pleasure to have you on the show. How are you doing today?
Doing very good, Gordon. Thanks for the great introduction. Just want to say thank you to yourself and Jose for having me on the show, and just look forward to having a great discussion.
Absolutely. We met briefly a few weeks ago and did some introductions, and it sounds like you've got some really unique takes on the progressive nature of restaurant technology. We're really excited to dig into that and hear about your experience and what your recommendations are.
Very good. Let's do it.
Awesome. Yeah, totally. Vinny, with your 20-year experience spanning from fine dining to quick service restaurants and impressive ability to succeed in competitive landscapes, how do you envision the concept of dynamic pricing being integrated into different restaurant formats, and which specific format do you think might benefit the most?
I think that's a great question, Jose. And after giving it some thought, I believe the format that it's going to fit best in early on as adoption is occurring is mostly in LTOs. So as a restaurant thinks about their limited time offers, such as early bird menus, happy hour, seasonal menus, we can think of a couple other, but I think with LTOs, it's going to gain the most traction because the pricing there that exists is already dynamic in a sense, and it wouldn't be anything new. You're just enabling it with technology. So I think that's where it's going to gain the most traction initially.
You made me think of Sherry Kynes, the guru of revenue management for restaurants, where she says that it is happy hours on steroids.
Yes.
And another one that I came from various places is that it's like an instant optimizer of menus, which usually would take hours and a lot of money to hire an expert, that it's done ongoing so that the restaurant is able to offer better offers, more frequent, and at the end of the day, have a complete profitable business that allows for more.
Yeah, I agree with that, especially with the biggest concern in the restaurant space itself right now is higher interest rates, right? With higher interest rates being, I guess, on the forefront of the minds of leadership teams in the space, I think they're going to be looking to, I guess, innovative new approaches or strategies, and dynamic pricing that Dynpricing might offer really hits the mark with that, because this allows them to say, hey, I've got some wiggle room here because of the pricing approach that we've considered or integrated. And then that allows them to, I guess, more clearly understand their growth plans because of the optionality that this dynamic pricing would offer. So,
Vinny, I'm curious, between fine dining, casual dining, quick service restaurants, which restaurant format do you think would work best for dynamic pricing?
I mean, Gordon, it's almost all of the above, because each category of restaurant or any concept of restaurant, whether it be fine dining, fast casual, a QSR, franchise, whatever, however you name it, they all have a need, I think, in a particular way. So whether it's a fine dining brand that focuses on maybe getting people at their bar early before a serious dinner rush or surge, that can work there. Or even going back to the fine dining example, even with the seasonal menu they might offer, right? Because seasonal menus already fluctuate in pricing based on the supply of any raw goods that might be needed for that particular menu item, right? I think for fine dining, mostly be for the area that I just discussed, but in fast casual and QSRs, I mean, I see this taking off, with LTO. So let's say it's a burger brand and they come out with some new, exciting new burger, or you name it, right? This will allow them to basically figure out where pricing is in various geographical locations. And this will help out with regards to that. So, I mean, I just see this applying in many different ways.
I'm getting to the point where I'm almost dropping the dynamic from dynamic pricing, because realistically, when you look at it, it's pricing. And what restaurant doesn't need to look at their pricing on a more frequent basis? I've got a marketing background, and as a digital marketer, I dropped the digital. I'm not a digital marketer anymore. I'm just a marketer, and it just doesn't make any sense. This is how we market now. And that's the same with dynamic pricing. This is how we're looking at our pricing structure, our pricing model. We need to look at it more often. We need to analyze our costs. We need to look at the competitive nature and the seasonality. Why does it need to be labeled as dynamic? It's such a buzz term now because it's all in the news. What? This is pricing. This is a pricing strategy.
I agree with you 100%, Gordon. I mean, listen, there's all kinds of monikers out there, right? You can call it dynamic pricing, surge pricing, revenue management, whatever the heck you want to call it. But at the end of the day, it's been around forever. Now it's just enabled a little different with, I guess, the surge of technology, mostly coming from AI and the use of algorithms, right?
I think with the rise of AI, and when you couple that with dynamic, that kind of makes people feel like we're living in the future sort of thing. Well, those of us in the industry know that happy hours have been around for quite some time.
That's right. That's
not
right.
Actually new. It's not actually new.
Yeah, and differential pricing is what allows you to understand margins, right? So it's
yeah. I mean, you hit the nail on the head there, Jose. I mean, where I see this really coming in and making a big difference is in projections, right? With a brand looking to possibly grow in a geographical area that they're not familiar with, they can just take a platform like yours and then start creating projections that are, I guess, a little smoother and not so choppy in a sense, which makes their investor base a little more confident, right? That's where I see this really taking off. Maybe finance guy might be a little biased, but opportunity there, you know?
Oh, but you're right. I mean, the whole point of the power of big data and something like AI is that it's going to give you forecasting that is more precise, that will allow you to make better decisions and planning, and therefore a smoother run of an operation. And at the end of the year, you will see what the results are because you had precise better.
Yeah, it's exactly that. I mean, as long as the platform is used in a very judicious way, where brands are respectful of not only their mission and vision, but also respectful of the customers, right? Because you don't want to scare them off and just raise prices for the sake of raising prices just because, let's say, you can during the busiest time, because eventually those busiest days are going to become regular days, or at best, right? So you got to be cautious, I think, with the use of it and apply it where it makes most sense.
I think that's a great segue into our next question. Rolling out dynamic pricing, there has been some pushback with the general public because they're relating dynamic pricing to surge pricing or price increases. I'm wondering, Vinny, given your prowess in identifying intimate details of customers and crafting solutions, how do you believe dynamic pricing might influence customer satisfaction and loyalty in this sector?
It's another good question, Gordon. At the end of the day, you just have to provide transparency, right? You don't want to surprise your guests, and you just have to make sure that it's in line with your company vision, right? Because if you are a trusted and respected brand, you don't want to veer too much from that. So at the end of the day, like I said, it comes down to transparency and just educating, not only maybe your customers, but also your leadership teams on the potential of this, as long as it's used, I guess, in a respectful way.
We just had this great conversation with Jay Ashton, who's an influencer in the space for many, many years. And he's got a big emphasis on menu management and menu design. And he actually just sort of, as a sidebar, mentioned that if he were to start a restaurant today, he would actually put what the profit margin was directly on the menu next to the item.
It's kind of like the Costco approach. It's just cost plus 20%.
Okay.
I mean, and look at the millions of people flock to that, and they're okay with it, right? Yeah. I think it comes down to consistency. If you're going to do it in a consistent fashion that your customers are aware of and are okay with. And then there's not a problem.
Yeah, and I think that it would be also capitalizing on that new perception that the consumer has, and that the caring for the restaurant from the pandemic and the third parties, and becoming aware of that. It could be a very interesting play to show that, and that it would have an influence in what the consumer actually chooses to order, because they may have such an affinity for the restaurant that they may want, like, oh, you know what, between the two that I love so much, I'm gonna go with the one that gives it a bigger margin.
Yeah, I can see that. Yeah, I can definitely see that playing out. So
I think that rolling it out in-house, and Jose and I have talked at length about the difference between rolling out dynamic pricing in-house as opposed to third-party channels, how much better it's received across digital, because there's a different mentality People are viewing prices on their phone or on their computer as walking into an establishment. But moving forward, I mean, oh man, again, Jose, I mean, remember we talked about the depth of the physical menu, right? And this is kind of where I'm going with this is ultimately, if for dynamic pricing to work in-house, don't we need to go to a QR code menu or a digital board or a VR style of a menu? Because right now, I still can't really see dynamic pricing working in-house. We look at Stonegate pubs, and I don't know if they're still experimenting with that in-house, but the pushback right off the bat was not great for that brand. I'm struggling to see how it can work with physical menus inside the restaurant.
Yeah, that's where the struggle might come, especially with full service type restaurants or fine dining restaurants where they're, I guess, take pride in offering a really nice menu. But there are ways around that, right? Who's to say that you can't have your wait staff come in with certain handhelds that offer that pricing in a very standardized way that's easy to follow and also, I guess, share and communicate with the customers. So that could easily be addressed. But in QSR, fast casual, obviously there's ways to make the integration of it very easy. Like you said, with the use of digital menu boards and kiosks, right? And obviously the ability to order menu items online, to implement it would be very easy, I think.
Yeah, I think kiosks, especially for quick service, is definitely an option that a lot of multi-unit brands really should be looking at closely, and that can help them roll out dynamic pricing.
I agree. All right. What are some of your thoughts, Jose, on that?
Yeah, exactly.
Share some initial thoughts. What's going on in your mind?
The first thing is, let's look at how bad that rollout was in the UK. And then, I think one time in a different conversation, the three of us talked about this, and then how the only way that you can roll something like that is that you create an atmosphere that is gamified. The Barcelona bar, the Dow Jones has beer that rolled in a ticker like in the stock exchange, and it shows the fluctuations. So it's a case to socialize and to actually boycott the beers that are not working.
The short of beer, right?
Exactly.
That creates a real market.
Exactly. And that pub has been around for a very long time, very successfully and renowned for the experience that is being there. And inevitably, you at least socialize as a group, like if it was a soccer game or a sports game, right? So how we can translate that into other environments, but I'm still thinking about, but definitely like the in the restaurant experience, the only way that you can do something like that is has to be gamified. Because if you see the opposite of gamified, which is people boycotting and complaining and stuff, the way they rolled it out is exactly what you don't want to happen. So,
I mean, the highs are really good, right? The highs are really good. The lows could be really ugly. I mean, imagine the irrational exuberance that can occur from applying something like that.
Yeah, especially after a soccer game.
My goodness.
I am excited though about the level of creativity we're going to see coming up here, experimenting with different methods and processes and the campaign types that in-house marketing is going to play around with to see what's going to work and what's not. We're going to see some pretty extreme examples, I have a feeling, but yeah, it's a challenge for sure.
New channel, new technology, new marketing.
Gordon, I mean, since you have that marketing background, I mean, how do you see this, I guess, receiving the biggest buy-in from marketing teams or leadership teams that have a marketing background in the franchise space, for example, right? Where is the buy-in going to occur based on the structure of the use of dynamic pricing or Dynpricing itself?
I think that it needs to be slow and deliberate, and it needs to begin on the digital side. And when all stakeholders have gotten used to the idea of price fluctuation, from promotional pricing to high demand pricing, I think that'll be a good enough sample size to make the transition to in-house. I think the biggest factor though is when and if restaurants are able to transition to digital menus in-house. It's still highly preferred to have a physical menu in your hands when you go and you sit down at a table, even at a QSR. So where do we get the buy-in? I think there's a lot of testing. I think there's a lot of time that needs to pass. And in order for marketers and leadership to really grasp how this is going to work and what level of frequency these price changes can be absorbed by their customer base without really alienating them. So I start off with digital. There's so much creative space to play in there. There's room to make mistakes in digital. And then you take that data that you accumulate from those tests, and then you start to slowly, maybe a couple of units here, a couple of units there, a couple of seasons or a couple of campaigns. But I would be slow and deliberate when testing in-house.
Yeah.
I love that strategy itself. I mean, I don't know how you feel about potentially like rolling out a strategy where you offer A/B testing particular company itself. Why not test out dynamic pricing with this group of locations, and then also in that same general area do the run test where they're not offering it, and they see the difference, and then that basically generates the empirical data that you're looking for, so that it gains traction in almost a frictionless type way. That's the way I see this rolling out, and that's the way I would look at it if I were still operating restaurants.
Yeah, I think that in my experience, there is a rollout that operations is always very interested in, of learning as quick as possible what are the results that are going to make the decision happen. So I think that they're willing to beta test, they're willing to run tests, and as long as it's more information than data and they get to understand, then they start to work with us in how the rollout would be. And the interesting part is that they know their locations, they know their regions by differentiating different factors, like, for example, the location, which is going to be very, very interesting. I remember in a rollout of coupons that were like 50% on the first order with a chain that I was working with, there was a particular location that was really challenging, and that it was because it was inside a university. So those people were obviously more prone to have 50 Gmail accounts to get the 50% every time they can, and they're students, so even tougher. So I think that those behavioral differences between locations and areas, provinces, states, it's going to become really insightful for them, and the feedback and them learning from the test. It's part of our big process, big promise is that we're going to give a lot of information that are actionable decisions that will include forecasts, so that you can decide really quick. Yeah, let's test this one and see how precise was it compared to the forecast. Okay, this one, what other information do you have for me from this experiment, so that I can learn more about my own chain? And that's where they're going to be like, oh my God, I can see a lot of things I never saw before.
I think that's where you're going to get a lot of buy-in from just having a data-driven approach. You really can't argue with the numbers if they're moving in a positive direction. So I see that approach work really well. So
it's a Pandora's box, and it's going to bring up another problem, right? And that is, as an operator, I don't have the time to figure out all this data, right? Yeah. You need to really simplify your tech stack and really pare down what you're using and test as much as you possibly can. But all that data is great, but if there's no actionable information there, it's almost useless. It just kind of sits there.
Yeah. While we're talking about data, right? What has been the preference with regards to the users of this system when it comes to ownership of the data? Are they concerned with who owns the data, or is that a bridge that you haven't crossed just yet?
It always feels like they are going to be concerned, but the response has been, you plug it, give me information, I can make decisions, show me what I have not yet seen. Tell me what I don't know. That's part of the excitement, and that's what I was alluding to, the information that it's so powerful and so well displayed that they can make decisions and trust the system so much that at that point, I believe they will not care as much, because it's still going to be their data. But the understanding of that, thank you. I'll give you more.
You think that's the case even with the larger brands, though, as far as the privacy of their data being a non-issue?
Yeah, because at the end of the day, the consent for what the changes of pricing or communication or any of the other elements that we consider what the powerful platform should have, it's going to be theirs. Their learning is going to be theirs. And at some point, how are they going to, I mean, if they want to extract reports, fair enough. Why would we share anything other than strategy, results, and things that are not related specifically to their data?
Yeah, if I could just add to that, I think really, Vinny, it's really important to have guardrails in terms of privacy and make sure that these companies are operating with ultimate transparency, to beat a dead horse, and having the correct documentation to establish that trust. But once that data machine starts going, the possibilities are simply endless, and the privacy element may become secondary in terms of their concern. We dealt with a lot of this at Modern Online Ordering, the company that Jose co-founded and I worked for a lot of years. And yes, we have those guardrails in place. Yes, it is important. We can always revert back to that documentation. But once the data started coming in, there were lights in their eyes and see all of the possibilities and all of the green pastures of what they can do with that. It's actually really exciting.
Another interesting part about that is that, and it got enhanced with the pandemic because all restaurants were helping each other, is that they understand that the privacy, but they would inquire about certain comparisons, right? So, hey, Jose, how are other chains of 5 locations performing just like mine in the same? Is it pizza? Is it something like, give me some benchmarks or something that I can
People are curious.
Of course. And
that starts the conversation, is just providing what you experimented with. So
right. And I think that the margin of overprotection over the data and some results or how they do things becomes smaller. It's not as big as we perceive, or like as if it was like maybe in finances or in law.
But less sensitive, it seems like, as far as the information that's being extrapolated and analyzed, I guess so.
Correct. So what they trust, or with someone that is handling their data like that, and that they are giving also a lot of data, is that, okay, I get it. You're going to keep it anonymous, but you may be able to help me with so much data that you have to actually give me some benchmarks. I want to see what I need to achieve.
Yeah.
Rather than, can you look at my...
That's a good point. And I think I would have to agree with the way you guys are thinking about all that aspect of the business, because it is important, but with the way you described it, maybe it can take a back seat.
Yeah.
We never would want privacy concerns to take a backseat because it really, really is important. But if you look at big delivery, we look at DoorDash, we look at Uber Eats, and we look at Grubhub, the real big players, there hasn't been a real exploitive scenario of privacy for brands that are utilizing those third-party deliveries. There are other concerns. There's the class action lawsuit against Amazon, where it's anti-competitive behavior. That is definitely something that is newsworthy. But looking at these companies, looking at this space on a day-to-day basis, I haven't seen a real privacy breach that has raised real alarm bells so far. I really think this is a wide open space, and there's a lot of different directions that this type of technology and these pricing models can go.
There's one area though that it is really strong, and that is the agreements that you have with those particular technology companies. That is sacred. Like, not even, I don't get how much are all others paying, or that is usually the sanctest piece of the data that it's just not shared. And it happens with third party too, because every operator has a different rate.
Well, all right. So guys, we are running out of time. There's more questions there. There's more of a conversation there. We're definitely going to have you back on. We'd love to continue talking with you. A huge thanks to Vinny for joining us today and sharing his perspectives. I'll leave you with this. Today's conversation reminds us that the key to winning in hospitality begins with innovative thinking and a strategic approach. Vinny's journey is a testament to the power of education, networking, and adaptability in navigating the complexities of our sector. Remember, success in this industry isn't just about great food and great service. It's about continuously evolving, embracing new ideas, and building relationships. The insights shared today are more than just strategies. They're catalysts for transformation and growth. Vinny, where can people connect with you? What's your platform of choice?
Gordon, I echo everything you just shared. I love where your head's at, with regards to the space. Jose, same with you. And I just want to say thank you so much for having me on the show. If you'd like to reach out to me, it can be found on LinkedIn, Vincenzo Puleio. Lived in the restaurant space for a majority of my life. So if you're looking for a consultant or an advisor, either because you have a restaurant brand or a franchise brand that you're part of, or if you're building a food tech company, please reach out. I'm here to help, work with many companies, and have a lot of experience in business development, fundraising, and general strategizing. So
Awesome. That's great. Vinny, thank you so much. Speaking of plugs, this podcast is sponsored by Dynpricing, real-time restaurant profitability. Dynpricing uses artificial intelligence to improve restaurant profitability by dynamically updating menus across digital channels like Uber Eats, DoorDash, and Grubhub. Vinny, again, thank you so much for your insight. It was wonderful having you on. That's all the time we have for this episode. Thanks again for joining us. Until next week, say goodbye, Jose.
Goodbye, Jose.
thanks, guys.
Awesome. Thanks, Vinny. That was great, man. We'll follow up with you, and definitely would love to have you back on the show.
Sounds good. Looking forward to it. You guys have a great weekend if we don't talk.
Thank you.
Take care.